Welcome back to the channel. Like always, my name's Jose Najarro and I am a self-taught investor looking for investments to grow my long-term portfolio through fundamental analysis. I am very excited about today's episode. We are going to take a look at a very popular stock right now. That is Apex right now. And Apex is a special purpose acquisition company that is going to merge with AvePoint. AvePoint is a company in the software department that is partnered with Microsoft and has been partnered with Microsoft for a very, very long time. The company right now and all the things I have looked at seems pretty good. So I'm very excited. Today we're going to take a look. First, start off by an overview of the company, see what they do. Then we're going to take a look at their financial numbers, see what kind of revenue growth they're seeing, what kind of revenue growth they're expected to see, what kind of earnings they're expected to see. And at the end of the day, I'm going to end with my thoughts on the overall business. But before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm and I truly, truly appreciate it. Also, on the description and the pinned comment, you should see a link to Discord channel and you should be able to join there for free. I post every time I buy. We have a community of over 1,000 members. Finally, you should also see a link to Webull. If you sign up following that link and deposit $100, we both could get a free stock. I think right now they might be doing a special. We might get 2 or 3 free stocks. So remember, this is APXT. The current stock price is up 29.21% for the day of Friday, and it's up another 7.5% after hours, sitting at current price of $15.27. On today's episode, we're also going to see what I think about this valuation. To be honest, even though it has seen this kind of growth, I still believe, based on the fundamentals that I look at, there's still much growth here. Obviously, it's going to be very much volatile, but at this current valuation, I don't believe it's half bad at the moment. So let's continue with the episode. All right, so first let's take a quick look at this merger and what's going to happen first. So right now, the current company, the current ticker is APXT. This is Apex Technology Acquisition Company. This is pretty much just a blank check company that's going to merge with a company to make it go public. The company is going to go public is going to be AvePoint, which is going to change to AVPT. This new acquisition will give AVPT a valuation of $2 billion at the IPO price. And obviously this isn't the traditional IPO. So what is the IPO price? In theory, with the SPAC company, the IPO price is $10. So let's say right now, APXT pre-merger APXT at $10, which is what, if you take a look at all their forms, at $10, that would give this company, once the merger happens, a $2 billion valuation. So right now, a lot of people might be looking at this and the market cap is $632 million. So the first thing people would be like, oh wow, a $2 billion valuation. If I buy now, I can 3x my money in no time. No, that's not the thing. So right now, let me just repeat that. At $10, which was the original price of this acquisition company, at that $10, that once the merger happens would give the new ticker AVPT a valuation of $2 billion. But first, like I mentioned, let's start off with the overview of AvePoint. So at a glance, AvePoint offers the only full suite of SaaS solutions to migrate, manage, and protect data in Microsoft 365. More than 7 million cloud users, including a quarter of the Fortune 500, rely on AvePoint solutions. And a great place to check out what they do or a little more about their solutions is go to avepoint.com. Obviously, they have a website where they show all the solutions, but we're also going to talk about them here. So right now, one of the biggest things and one of the things that investors are liking right now is that AvePoint has a strong partnership with Microsoft, as we saw that they are the only full suite of all of SaaS solutions for Microsoft 365. So they've been together since 2001. So they've been in partnership with Microsoft for over 20 years. This shows you that this partnership is strong. It's not something that would go away anytime soon if they've been doing this for 20 years, right? And this is before Office 365 even took place, right? Office 365 is now the new clouding subscription service that Microsoft has. And that just started, I believe, in 2017. So AvePoint has been working with Microsoft even before all of that. So here is a perfect way of explaining what they do. So they're pretty much the bridge that gaps between what Microsoft Cloud offers and what enterprise businesses require. So this is right here, Microsoft Office tools. You have your Word, your Excel, your Outlook, your Microsoft Teams, and everything else. And obviously you use them for seamless collaborations, for Office integrations, or for better decision makings. AvePoint then creates this bridge to make the companies use these Office tools into something that enterprise requires, which it deals with transformation, governance, and compliance services. And here, if we take a look at the next slide, we're going to see a little bit more of what each of those solutions are. So in the transformation stage, they do stuff like cloud migration and consolidation. So they have solutions like AvePoint Migration, AvePoint DocAv, and AvePoint Ava. Then in the governance, they have things like cloud management, cloud backup, cloud governance, and My Hub. And then in the compliance stuff, they have things like cloud records, compliance guardians, and policies and insights. So you can see they're hitting all the three things that these enterprise need. And a lot of big companies are using them right now. Let's take a look at some of their customers. Some of their customers right now are NBC, Disney, ESPN in the communication side. We also have T-Systems and Verizon, some big companies there. In the retail, we have Caterpillar. We have a lot of automobile, Honda, Fiat, Porsche, Volkswagen. We have Rolex as well. Hershey's, Honda, I mentioned already. Then if we look into pharma and health, I'm not too familiar with pharma, but they do have big ones like Delta Denta. That's one of the biggest dental insurances here in the United States, maybe international as well. I'm not sure about that. Then they have Lilly, Merck, Pfizer, all big companies out here. In the financial services, they have big banks like Citi, Fidelity, Bank of America, MetLife, JP Morgan. They have H&R Block, TD Ameritrade, Barclays as well. In the government, and this is the one I'm actually very excited to look at. I think government is one of the best markets to hit if you can hit it. Obviously, to get into the government education or government platform, you need to have some form of securities and some form of compliances before you can even get to there. So just getting into the government market is very hard indeed. And the great thing about it is the government, once you're in it, it takes a long time because they have to do all this process before you become even a customer of theirs. So for them to switch out of you is very, very hard, or just takes too long of a process to even deal with. So these are usually customers that stay here for a long time. And we all know the government, that's where the money is. So they have things like IRS, they have the US Treasury Department, US Department of State, they have NASA, they have the New York City government, they have Freddie Mac, the huge mortgage companies, right? They have the United States Coastal Guard. So we can see they have big players here. And the high technology, they have HP, Lockheed Martin, and Raytheon Technologies. Lockheed Martin and Raytheon Technologies, for those that don't know, are government contractors that deal with a lot of self-defense systems. So it's pretty impressive. Again, to make it even into those two companies right here, it takes a nice amount of prep time, a nice of background check and stuff like that. So it's good to see that these companies are holding them. And again, these are ones that are very similar to the government. They get funded by the government. So it's great to see these two names here. They also have Siemens, Texas University, Texas Instruments, which are really big high technology companies. So we can see they have a lot of big customers behind their name. All right, so now that we understand what AvePoint does, let's take a look at their financials. But before we do that, make sure to check out 7investing.com, where every month they recommend 7 stocks for $17 a month. And they're about to be December, so they're about to recommend their new 7 stocks. If you use my link or promo code Jose, Jose, you get $10 off your first month. May I say, yes, this is an affiliate program, but I would recommend their services to anyone. All right, so now let's take a look at the valuation. So remember, I mentioned that the current stock price, share price, is the $10. This is the enterprise valuation. They're going to have about 199 outstanding shares. This is going to give that equity value of about $2 billion of valuation. So that's what I'm saying. That share price at $10 right now for APXT gives it that $2 billion valuation. They're also here showing us their enterprise value. So their enterprise value is their equity value, which is their total market cap, plus any total debt minus any form of net cash. So here they're just subtracting net cash. What does this tell me? The first thing this tells me is this company has no debt at the moment and is only positive in cash. That is pretty impressive, something I'm liking right now. So right now, with the current price of $15.27, the current market cap giving this future, the current market cap is actually $3 billion. So remember, IPO price was $2 billion, current market cap right now, if in regards to this price that it's at right now after the merger, would be about $3 billion. I think it was like 3.05 right now. So again, we see a nice jump, but it's still not that big of a jump if we're going to take a look at the long term of things. Post-transaction ownership, we're going to see 72% of the ownership is going to own by the existing AvePoint shareholders right now. 17.6% is going to be owned by the Apex public shareholders. 3.3% is going to be owned by Apex founder and private placement sectors. And 7.0% is going to be owned by PIPE investors. So right now, and they're also expected to close this deal by Q1 of 2021. That's when the merger should end by. So that's the latest of March 2021, about 4 months from now. But first, let's take a look at the growth. So for 2019, total revenue for this company was $117 million. For 2020, for the full year of this year, they're expected $148 million of revenue, 26% growth. For 2021, they expect a 30% growth, which is $193 million. And for 2022, they expect $257 million, which is a 33% growth. This gives it a compounded annual growth rate of about 30% between 2019 to 2022. This is a high growth stock, a super high growth stock, if I may say. Out of that total revenue, we're also seeing huge growth in recurring revenue. Recurring revenue is my favorite type of revenue because it's revenue we know is going to come. Eventually, recurring revenue in 2022, they expect it to be about 85% of total revenue, and they're seeing high growth there of about 38% compounded annual growth rate. They also are already gross profit margins. They're in the high 70%, low 70%. In 2022, they expect 74% of gross margins. And the other thing is they are positive in earnings before interest and taxes. So that's a great thing. That means that from their everyday business, they are profitable right now in non-GAAP earnings, right? So this means that they're doing probably a nice amount of dilutions to paying their employees and stuff through outstanding shares. So one thing we are going to see, we're going to probably see some dilutions right now on it, but at least they are cash flow positive in earnings before interest and taxes. They're expecting about percentage of revenue to be profitable about 7% at the end of 2022, which is pretty strong. So let's take a look at current price to sales ratio. So current price to sales ratio at current valuations that we saw right now, which was about 3 billion with this current price hike, gives it a price to sales ratio of 20.63 for this year of 2020. For the upcoming year of 2021, it gives it a price to sales ratio of 15.82. So one thing that is very impressive about AvePoint, and they mentioned in this slide, is right now in the New York Stock Exchange and in the NASDAQ, there's about 212 public companies right there. Out of that 212, only 137 of them make over $150 million in revenue for this expected year. Out of those 212, only 32 make over $150 million in revenue and expect a 25% annual revenue growth this year. 32. And out of those 212, only 5 companies make over $150 million in revenue, have a 25% annual revenue growth for this upcoming year, and have over 10% positive margins on earnings before interest and taxes. And the 5 companies that they mention here at ZoomInfo, ServiceNow, RingCentral, and Atlassian. And this is also going to include AvePoint. AvePoint will be the 6th company out of those 212 companies that has more than $150 million in revenue, that is growing at over 25% revenue growth this year, and that is positive earnings before interest and taxes by over 10% margins. And let's take a look at the price to sales ratio of those other companies. So right here on my top right, I added the tickers and these 5 companies that we took a look at. So Zoom, this is ticker CM. Then we have Zoom Info, ticker CI. We have RingCentral, ticker RNG. We have ServiceNow, ticker NOW. And we have Atlassian, ticker TEAM, TEAM. And I also have the price to sales ratio for this year and for the end of next year. So this gives us a way to really see this valuation on all these top 5 companies that are doing amazing compared to all the other software companies. And if you guys want me to do an episode on these software companies, make sure to let me know on the comments. So if we take a look at price to sales ratio, the lowest right now is Zoom Info, which would be 16.75. The second lowest would actually be AvePoint at price to sales ratio of 20.63. And the highest right now is actually Zoom with the price to sales ratio of 55.75. Ring is 22.49. ServiceNow is 22.93. And Team is 29.61. So we can see right now, AvePoint doesn't seem to be overly overpriced compared to these other 5 companies that are in the same market. So that's definitely something I wanted to share. And like I said, if you guys want me to take a look at these 5 companies, let me know in the comments below. The next slide we're here looking at is the overall addressable market that this company has. So right now we saw it has about $148 million of revenue. 13% of Microsoft Cloud penetration is $1 billion. So they still have so much more market cap, addressable market cap. The current Microsoft Cloud size is $5 billion. Then they have Microsoft Future Cloud Growth, which is this much bigger. Additional cloud growth would be about $33 billion by the end of 2022. And by the end of 22, the digital transformation total addressable market is about $1.8 trillion. This is insane. Right now, in 2020, there's about 250 million users of Microsoft 365. Right now, AvePoint is only hitting 3% of that total users. They are expecting in the future that Microsoft users will have about 500 million users. That means, and they expect to have 10% of the total shares, which means 50 million users. So that means that that's pretty much more, about 8 times more users that they have right now. That is the type of revenue growth that is expected for this company. Now that we understand what the company does, now that we know these financials of the companies and their valuations, let's take a look at my overall thoughts. But before we do that, guys, make sure to subscribe to my second channel, Jose Najarro Entrepreneur, where I pretty much talk about other ways to make money outside the market. Like I said, I've been doing this for about 7-8 years, trying to become successful, trying to make it big in this world. And I want to share some of my ideas through the process. So that's Jose Najarro Entrepreneur. Make sure to check it out. And if you guys want to continue to support the channel, make sure to pick out one of these nice shirts or hoodies. Self-taught investors, like I mentioned, is pretty much everything we are in this channel. So now my overall thoughts. The first thing I want to talk about APXT is, yes, it has taken a nice price up, but with the $3 billion valuation right now at $15.27, I don't think it's overvalued right now. Does that mean I'm gonna go out there and buy a big share? Me personally, the way I invest, no. I don't mind dollar cost averaging right now and add on over time. One thing I do want to say, the major risk for this company is, one, the form of volatility this company is going to go. We saw it go up 30%. It's not going to be impossible for the company to see 10% drop, 8% drops per day because of this volatility right now. Most SPAC companies that we see an overextension before the merger, and after the merger, we see a nice price decrease. Another thing we see is right now this company is probably doing a nice amount of dilutions of shares to pay its employees, to pay its leadership, and to pay all that. So we're going to see a bit of dilution on shares as well as the years progress. They do have a lock point period right now that after the merger happens, I believe it's 180 days. I'm not 100% completely sure, but definitely check out that. You can go to the SEC Gov and say when is the lockout date, and that means that insiders won't be able to sell positions until 180 days. I'm pretty sure it's 108 days, but I could be completely wrong on that. It might be a little bit lower. But this means that big shareholders will not be able to sell any shares until 180 days from after the merger. So sometimes people wait for after this lockout period to see if insiders are selling, and sometimes that drags the price down a bit. Well, right now, with the current ticker up to $15, that gives the current company a market cap of $3 billion. From $2 billion market cap to $3 billion, with the expected growth of over 30% compounded annual growth for the next 3 years, being profitable in earnings before interest and taxes, having a very strong balance sheet, having backed up by Microsoft, and making it into this super relevant companies of 5 other companies that meet this criteria. It shows that AvePoint is definitely not one of those other SPAC companies that are coming out right now. This is definitely a strong company. So coming in on Monday market opens, I do have some cash at hands. I'm going to start with an entry position, and then from there, I might actually even sell some positions. I'm still debating to add on, to continue to start off with a position on AvePoint. So I hope you guys enjoyed today's episode. Like always, make sure to smash that like button. It helps so much with the YouTube algorithm. Take care, have a good night, and see you next time.